Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
Welcome to ElectroDrive News, where we dive into the latest news and trends from the electric vehicle industry. I'm your host today, discussing a story that's got everyone in the EV community buzzing. Chinese EV maker Hozon New Energy Automobile is facing financial troubles that could have far-reaching consequences for the African market. For years, smaller Chinese manufacturers like Neta and Xiaohu have been expanding into overseas markets, particularly in Africa and Asia. These brands have struck a chord with first-time car owners who are turning to more affordable models as a way to go green. But now, it seems that giant Chinese EV manufacturer BYD is threatening to take their lunch in a fierce price war. As of last year, Neta had delivered close to 400,000 cars worldwide, with some of these vehicles finding their way into countries like Kenya and Thailand. The brand's expansion plans have been impressive, but now they're facing mounting financial troubles. Hozon New Energy Automobile, the parent company of Neta Auto, has struggled for months with a worsening cash flow, including production stoppages, large-scale layoffs, and failed efforts to secure fresh capital. According to Lei Xing, co-host of the China EVs and More podcast and a long-time observer of the China automotive space, I think they're done, in my personal opinion. He notes that to survive, the company and others that may face the same fate may have to pivot and focus on making spare parts and offering after-sales services. This financial uncertainty has cast a shadow over Neta's expansion plans. In Thailand, the brand's general manager has sought to reassure customers that production and sales will continue. But in Kenya, local dealers like Moja EV and Udu Cars have positioned Neta vehicles as affordable alternatives to gasoline-powered cars. Drivers like Paul My have turned to these EVs for lower fuel and maintenance costs. But what does this mean for the broader transition to cleaner transportation? Chinese EV brands like Neta have helped bring electric mobility within reach for millions of first-time buyers in the global south. However, if financial instability derails supply chains, it could set back our progress towards a more sustainable future. So, what's at stake here? The turmoil underscores a growing challenge for China's EV sector, where competition intensifies and weaker companies risk collapse. It's a stark reminder that the fate of these brands will have far-reaching consequences for consumers, dealerships, and entire industries across Africa and Asia. The situation is unfolding quickly, with Neta maintaining that it remains operational, but whether it stays that way may depend on whether its parent company secures a financial lifeline before it's too late. As the EV industry continues to evolve, one thing is clear. We need to keep a close eye on developments in this space and ensure that everyone benefits from the transition to electric mobility. That's all for today's episode of ElectroDrive News. Thanks for watching.